Okay. Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and of course, today we shall be reviewing how the CPI affected the market, and also to see what is possibly causing gold to break through the different levels that it's breaking to test new highs every other hour. Good morning, Martinez. Good morning, Moses. You're most welcome uh, to today's episode of the Market Snapshot. Okay, so this is really just for us to see the live updates of what's currently happening in the markets. We have quite a lot that's taking place. Essentially, the main reason why we are seeing gold moving the way it's moving is due to the potential, the likelihood that there's going to be a potential attack from Iran. Um, Okay, so this is currently what we have. So Iran has indicated that they are likely going to attack. They're likely going to attack Israel very, very soon. And essentially, what is happening is that the US, anytime from now, and Israel is really on. They're on standby. We've been seeing a lot of the headlines that have been coming in right from the Israel generals, and of course even some of the IDF generals that have been indicating that they are on standby for any attack from Israel. And of course, looking at CNN's live updates, we are saying the US and Israel are on high alert for a potential attack by Iran and its proxies that could escalate regional tensions stoked by the war in Gaza. Iran has vowed revenge on Israel after a deadly strike on the embassy compound in Syria. Now, the reason why we are in the current state we are in is because we had an attack. I think it was about 2-3 weeks back on Damascus. The embassy for Iran in Damascus was attacked, and Damascus is in Syria. So after that attack, that's the reason why Iran got onto really, they got back and they said that, we have to, you know, retaliate for this attack. And that's the reason why we are seeing the move that we are seeing on gold. So we are not so, we are not so certain of what's going to come out of this. But of course, we are seeing gold has moved as high as $2,400. And of course, that move is majorly on the back of those tensions. So we have to wait and see as we go into the weekend what is likely to happen. And of course, if you want some updates on that, you can, of course, check CNN here. So it's saying the top US general for the Middle East has traveled to Israel as the region braces for possible Iranian retaliation to a deadly strike on Tehran's embassy compound in Syria. So, it's easy for you maybe to attack a country, do this and that and all this, but to attack an embassy is really trying to get, to rile up tensions and to get some kind of a reversal or a pushback. So that's why we are seeing the tensions we are seeing. So it goes on to that Prime Minister Benjamin Netanyahu warned that Israel is preparing for scenarios in locations other than Gaza. We have determined a simple rule: whoever harms us, we will harm them. So the tensions are really, really high, and that's why we are seeing that really, really big move that we are seeing over. Now, in addition to that, I also want us to review the central bank gold reserves. This is really just some data I got from the World Gold Council, which is showing us essentially what is happening with the gold reserves. So gold reserves have been increasing. And of course, the main reason why we are having the reserves increasing, why we are having gold also moving higher. On one hand, we are faced with the geopolitical tensions. On the other hand, we are faced with the demand, okay, that is currently there for gold. That is I would say, more than usual, or in other words, unusual. We are seeing that actually Turkey, China, Poland, and Czech Republic, some of the central banks that are increasing that purchase for gold, and could also be one of the reasons why we are seeing gold moving higher now. On one hand, the move high on gold might have to do with that risk that you have the year we are in is where we are having the US elections. And in addition to that, we are not so certain of what the elections are going to do to investments, to economies. So we are seeing that increase on uptake for gold. So the other thing, of course, especially for China, is that they are part of BRICS, and of course there have also been some indications that possibly we are going to see that the BRICS, which is Brazil, Russia, India, China, South Africa, coming up with a gold-backed currency. There have been some hints on that. And of course, if you come up with a gold-backed currency, what that means is you're essentially indicating that there's going to be likelihood, possibly some kind of moves higher for gold. So that's really what we are having at the moment, and we are likely to see possibly some some pushback higher for that. Yeah. So crossing over to gold holdings, this is what we are seeing. Some of the different countries, the ones that haven't even been taking part of holding up gold, we are seeing that they have actually increased. We are seeing Turkey has done that. Argentina has also increased on that. Austria, Belarus, and Cyprus. But currently, we are seeing that actually the one with the biggest, the region with the biggest holding is North America, that currently is having, I would say, about a 60.72% holdings there. Then, of course, we have Central Asia following up, and then and then you go to Western Europe. But when you go uh, to Asia, one thing, of course, that we are seeing is that for Western Europe, you can see that actually Germany and some other countries like Italy have really a lot of reserves there. So the demand for gold is quite high, and I'm thinking this is one of the things that's going to enable us to see big moves higher. Now, looking at the COT report, the COT report is also going to give us some indication with what's happening with gold. So looking at the COT report today, one thing that we can observe is that there's been an increase on gold holdings on a future positions by managed money. Managed money is holding about 173,000 gold positions, but for long speculative positions. And they have also increased that number by an additional 10,000, okay, indicating to us that there is still that demand for gold. Now, other reportables for the week ending 2nd of April, they also increased by 5,600. It's likely that once we get the new COT report that factors in this week, I'm thinking the numbers are going to be looking very, very, very different. And we might see that the positions have actually increased for buys more than sells. Now, crossing over to the economic calendar for today, first of all, let me first speak about CPI. So we had CPI on Wednesday, and the CPI was a hot CPI print. It affected the dollar to the upside, and of course, if you look at the DXY, DXY is looking extremely bullish on the back of that inflation resurgence. And yes, we might have gone a bit of not that much of a big report for the PPI, but the fact that the CPI reading was strong, I think put the nail in the coffin really for other assets that trade against the dollar. So in my opinion, this is where I look at the DXY moving over the next few weeks. Of course, I've been bullish on DXY from last week when we had NFP. The NFP reading came out at 300K, which of course was supposed to get a bullish DXY, but that didn't happen. But the CPI reading that we got this week provided the US dollar a lot of strength. And of course, at the moment, it has broken out of my fib box. And it looks like it's ready to test these highs around the 3rd of November 2023. So keep in mind that in times when you have tensions, such as the times we are in right now, where we are seeing anytime from now, there's going to be some kind of attack. I don't know whether Iran is just merely trying to scare the US and Israel, but if there's any reason for gold to buy and for the dollar to also buy, it's a time such as now. The dollar is a reserve currency, and of course, I know investors are going to try and hedge and of course try and park their money in money market assets so that they protect themselves from any downside or any kind of risk that may come from an imminent war. Now, I expect the DXY over the next few months to buy to this area. And of course, that resurgence of inflation has allowed that to happen. And that's what we are currently seeing with the dollar. Now, we are going to cross over to the chart soon and we shall see what is happening with the GBPUSD, Euro USD, and of course other assets like USDJPY that are also buying a lot. So going to the calendar for today, we can see that we had some data coming out from the UK, which was GDP year over year and GDP month over month. Now, the GDP we got for the UK was a bit mixed. We saw on the yearly basis, we actually got it going into negative territory, going to negative 0.2%. And of course, for the GDP month over month, it actually decreased still. So the reason why we are seeing that drop today morning on GBPUSD, I think has a lot to do with this report. The report is not looking good by the looks of it. And of course, there have also been some indications that a slowdown from the UK possibly is going to cause the Bank of England to look at cutting rates, okay, so that they can prop up a struggling or weak economy. So should we get any indications from the MPC, which is the Monetary Policy Committee, that they are likely going to look at cutting rates soon enough, we are going to get a weaker pound. And of course, if you're trading pound dollar, then you'll expect that there are going to be quite a number of sales that are going to come in from that data. Now, we also got the German CPI coming out at 9 a.m. this morning. The CPI reading didn't look, it really didn't look great. We saw that there was actually a decline on the CPI yearly basis, again reinforcing that sluggish narrative that we are seeing with the economy. And of course, the only economy right now that has been really resilient has been the US, which of course has had relatively strong CPI. But in addition to that, the US's GDP is still looking really strong, which could be one of the reasons why we are also seeing the dollar benefiting greatly from those moves. Now, again, guys, it's a busy Friday because aside from everything we have spoken about, one side of the market, we also have earnings reports coming out starting today, the 12th of April 2024. It's earnings season in the US. So the bank is going to kick off earnings this week. And of course, today, Friday, before the market open at 4:30 p.m., we're going to get earnings coming in from JP Morgan, Wells Fargo, BlackRock, Citigroup, and State Street. And of course, we should see strong earnings for the banks without a doubt. So that move higher on US 30 from yesterday, possibly if we get strong earnings, then we're going to see a very sharp move higher for the indices. Now, I know some of you might wonder, like, Iran has been saying that they are likely going to attack the US very soon, okay? But now, what does that mean for the US indices? What does that mean for the stocks? Are they likely to also get affected by that? I don't think. Remember, the first country that is that is facing Iran in terms of retaliation is Israel. So before Iran attacks the US, which of course it's unlikely that they will, however, they have said that if the US gets involved in any way by helping Israel, then it means that they are just simply telling Iran that, you know, we are also in on it and we want to get involved. Yeah, but I don't think that's going to happen. I don't think that stocks are going to get affected as much. Looking at the S&P 500 VIX, which is the fear index, we're not seeing that much of a reaction from what's happening in the Middle East. Yeah. If you look at the commodities, for those of you that have been trading oil, without a doubt, I'm sure you guys have observed that oil prices have been rising very sharply because of that tensions in the Middle East. Okay, so it's likely that you're going to keep seeing higher crude oil and, of course, higher Brent. Awesome. So I think that's it. We shall be crossing over to the charts. We shall be crossing over to the charts to start to go over the MT5. Okay, so let's cross over to the MT5, guys, and see what's happening over on the charts. We are going to begin with the indices, and then from the indices, we shall move over to other things. Awesome. So US 30, this is what it's looking like at the moment. Okay, keep your questions coming in, guys. I think I'll handle them as we go along. So this is US 30. We're looking at it on the H1 time frame. So for US 30, right now we are having a condescending wedge that it was actually able to break out above. That was yesterday. Yesterday, US 30 was a buy. I don't know if you guys were able to catch it, but it was a buy. If you're a price action trader, definitely we can see how it failed to break below this level of 38,100. And of course, that expected positive earnings from the US for the big banks like JP Morgan and BlackRock are likely. Traders are pricing in better than expected earnings, which of course will indicate to us that we will then see a move higher. So I'm expecting we're going to get a move higher here today on strong earnings from JP Morgan and some of the other banks. We are going to possibly come and feel this move that we had from Monday, and which is going to take us closer to this level here. Now, I know there have been some tensions from Iran and all of that, but I don't expect the US 30 to respond as much. And of course, looking at how the VIX is doing, this is the fear index. The fear index still is not showing us any pricing in of any war fears or anything like that. So since the VIX is not showing a lot of fear at the moment, I don't expect us to see that much of a reaction on the indices. So I'm expecting them to rally today, which of course I know a lot of you are wondering, no, I think that's not possible. We're having a run on one end scaring us. We definitely cannot get this thing, selling, rather buying. Yeah, but if we get strong earnings, then definitely, without a doubt, we are going to get some rallying there for the US 30. Yeah. So this is the condescending wedge. It's a descending channel, and if we hold this price very well and keep above this level, then we should see the Dow Jones rallying and moving all the way back here. Now, however, if the earnings are not as good, which I don't expect for the banks especially, then we are going to see the US 30 selling and possibly coming back to the bottom of this channel. So if you're going to buy from here, then definitely your stop losses should be somewhere in the middle of that wedge so that you hedge yourself against any moves to the downside. Now, looking over at the NASDAQ, yesterday Apple announced that they are going to integrate AI capabilities in their M4 chips. Okay, so Apple announced AI integration into M4 chips. So this news came out, I think, sometime around the US session, and we saw that actually Okay, what have I done? Okay, so yeah, so there was this announcement. It came out around the time, around US session time. And of course, what we had is that we actually saw a very sharp move higher for the NASDAQ. We saw a sharp move higher for NVIDIA. The reason why NVIDIA actually moved higher was simply because NVIDIA makes chips. And of course, Apple, without a doubt, most likely is going to look to NVIDIA to be one of the companies that it might want to partner up with. So today I'm expecting the NASDAQ to continue its move higher. We might possibly move to test these levels here around 18,500. And of course, I'm expecting this to happen over the course of today evening and possibly next week on those expectations for chips. So what has been happening is that we are in some kind of AI exuberance, which started for the later part of last year and now also this year. And the reason for that is because um, the demand for AI is great on all fronts, and a lot of companies are now trying to see how they can leverage AI for their products, for all of this. So one of the indices that is going to benefit a lot this year is going to be the NASDAQ. Okay, so if we get more of those announcements, we should then see a much bigger move higher for these indices. Now, crossing over to gold, this is what gold is looking like. There's a saying that they say that if you can't beat them, join them. Okay, so that's what's happening with gold. I know we have been having a lot of people trying to sell gold, asking when is the gold rally going to end. Guys, if you're a trader, one thing that you need to do is you need to keep switching sides. Okay, traders are not investors. Traders are not investors. You're not investing in these assets. All you're doing is holding the assets for a particular period of time. Make money from the asset and then, of course, jump out of the asset. That's what we usually. That's how we're supposed to approach trading, right? So, if you're seeing gold having very strong upside momentum, the best way to approach it is actually really to buy. The reason why gold is moving higher, on one hand, has to do with the gold purchases, like I've showed you, but on the other hand, has to do with what's happening with the imminent Iran attack. Today is Friday. We're going into the weekend. Definitely, if you're going to the weekend, no one wants to. To get to speculate and get be on the wrong side of any attack by Iran. So what that means is that most likely we're going to see gold moving higher. We might potentially see even a gap on Monday. Gold could gap as high and move even as high as this on Monday on that fear, okay? Because the buying is not going to stop, especially now that Iran has put us on so much tension. We're not so certain when they're going to attack, how they're going to attack. So all those things is what's happening now. Before we had this break to the upside, gold essentially created a nice ascending triangle around there. And we're actually seeing it still moving very nicely to the upside. We have a lot of full body candlesticks showing us that that strong upside momentum is still holding very nicely. So if you're going to trade gold today, I think you might want to wait for a slight pullback and possibly then wait for it to move higher. But the upside momentum is very strong, and it's really going to affect gold, especially as we go into the weekend that we are going into. Yep. So that's what we have for gold. The technicals and the fundamentals are aligned very nicely, and it means we should then see gold possibly moving to the upside more. Now, crossing over to Euro USD. Euro USD is in a very strong downtrend. The reason for this, of course, is to do with the DXY strength. But of course, the ECB also mentioned yesterday that they are going to be looking into cutting rates very soon. So I'm expecting over the course of the next few weeks, we are going to see Euro USD possibly getting back into this descending channel. If you look at it on the H1 time frame, you can see that we were in a descending channel from early on this month. We got out of it on FOMC, got back into it the week after. Actually, this was actually Thursday, the day that followed the FOMC conference. Now, after getting back into this channel, we moved out of it, and now we look like we are heading back into this channel here. Okay, so your USD is still very, very bearish, and I'm thinking the best way to approach trading with it is that you might want to wait for any retracements. If we get a retracement to the upside, possibly then you can look for a potential sell. Rather, if you get an extension to the upside, so if you get maybe a move up here, possibly to that golden ratio, then we can look for a sell to take us all the way down. But it's still very, very bearish, and we should see more weakness there as we go into next week. GBPUSD is also possibly testing its November lows very, very soon. It's on the verge of breaking below 1.25. If we see a break below 1.25, I think Euro USD, rather GBPUSD is going to be trading closer to 1.24, where it was around November. So still looking really, really bearish at the moment. And of course, the reason for that is the strength for the DXY, which I think I've already shown you guys. The DXY is looking still very, very bearish at the moment. And we should then see Euro US, GBPUSD moving higher, rather lower, and possibly breaking through those levels. That's what I have for you guys. If you have any questions, now may be the time to up your questions so that I can help you with them. Yep, question time, guys. When will gold rally end? Yeah, it's really hard to say. It's really hard to say. I think gold is having its big break, and of course, when an asset is having a big break, what that means is that we are most likely we're going to see a lot of strength going into the year. We might even see gold reaching as high as $3,000. Might not happen now. Sometime soon enough, definitely will happen. The rise of the dollar and gold rally causes uncertainty. Any insights on that? I mean, Francis, what is there to say? You've said it all. You've said it all. Okay. Yeah, dollar is a safe haven. Gold definitely is also a safe haven, and you're having all these fears, so you would want to be protected. Okay, and that's the reason why you have that happening. U.S. inflation seems out of control. Rising gold prices unstoppable. Kindly comment on it. Yes, U.S. inflation is not out of control. That's one. It's not out of control. Out of control would mean that we're having some kind of hyperinflation, which is not what's happening in the US. We're just having a bit of kind of a resurgence of inflation. Inflation is steadily rising, right? It's not out of control. It's actually steadily rising about 1.4%. If you look at the headline number is 3.5%. Long-term inflation target for that is 2%. It's up only about 1.4%, right? So what that means in that case then is uh, what does that mean? That means then that the inflation is actually not too far from target. Okay, it's not too far from target. So the US most likely will have it under control soon. Moses Rono, what would be the best asset to trade today? Best asset to trade today, I think for me, without a doubt, is going to be the Dow Jones. The Dow Jones has a very, very nice pattern there, which is the condescending wedge, has just broken above it. And uh, and this is a sign that we're going to see some bullish momentum there. And of course, we'll then see a move higher on the back of earnings. If we get strong earnings today, then definitely we are going to see USDJPY, sorry, not USDJPY, US 30 roll moving higher. So remember for US 30, I said US sell or your stop loss should be somewhere within the wedge, right? Just in case the markets reverse and move down, you want to be protected. That goes without saying, right? GBP card, I don't have it on my watch list, but I think it is bullish, rather bearish. And of course, the reason for that are those eminent rate cuts, okay? GBPJPY, I think you're seeing it, it's also bearish. So I'm thinking we should then see some bearishness for that particular pair going into the weekend. Any other questions, guys? USDJPY. USDJPY, when I last checked USDJPY, it's bullish. Last time I checked, and I think it's still bullish. We have an ascending triangle there, so we should potentially see it moving to the upside on those expected strength for the DXY. Remember, DXY is strong, right? DXY is strong, so we should see some strength there for this particular asset. Any other questions, guys? Okay. So if we don't have questions, then I wish you guys all an awesome weekend. Trade safe. Make sure that you have your stop losses set at your different levels, and of course, keep in mind that trading is speculative. Ensure that you are well protected, and that's the reason why I'm letting you guys know that you have to have your stop losses set for all your trades. Also, I wish you guys all an awesome weekend. We shall meet then next week for more snapshots. Cheers, guys, and all the best.